Good morning. I'm Ellen Honigstock. I'm the Senior Director of Education here at Urban Green Council, and today we have a great event about how you can use PACE financing to pay for energy upgrades at your building. We'd like to thank Con Ed for sponsoring this event. Okay, so let's get into it. We have three great panelists for you today. Ivy Trzebucki from the New York City Mayor's Office of Climate and Environmental Justice, and we have Kyle Madden-Peister from NYCEEC, New York City Energy Efficiency Corporation, and Michele Pitale from Counterpointe SRE, who will present a brief case study of a recently closed project, and I'll be your moderator. So I'm going to turn this over to Ivy now.
Thank you so much, Ellen. Good morning, everyone. As Ellen said, I'm Ivy Trzebucki. I serve as the Director of Climate Financing Strategy at the Mayor's Office of Climate and Environmental Justice, and our office leads New York City's efforts to confront climate change by cutting greenhouse emissions, preparing for climate impacts, and advancing environmental justice and public health. We structure this work around three pillars: decarbonization, resiliency, and environmental justice. And so decarbonization means cutting emissions from buildings, transport, and energy systems. Resilience is preparing our neighborhoods to withstand and recover from climate shocks and stressors. And environmental justice is making sure historically underserved communities have access to resources and are not left behind in the transition. Local Law 97 is our ambitious climate policy, which targets building emissions, which is responsible for about 70% of New York City's total emissions. The law, which was enacted in 2019, sets caps for more than 50,000 buildings larger than 25,000 square feet, covering the vast majority of our building stock. And it is on a tiered pathway starting this year and tightening limits in 2030. Given the diversity of the building stock across the city, this is no small task. And there is a quite significant investment. You know, we estimate around 12 to 15 billion in retrofits by 2030, but roughly about 5 to 6 million of that, 6 billion, I should say, is expected to be paid through energy savings. This spring, we extended our compliance deadline to the end of August, giving DOB and our agency partners a critical opportunity to refine their approach. And as a result, I'm excited to say that we had 95% of covered buildings have actively engaged with DOB, demonstrating that owners are eager for clarity, guidance, and financing pathways to meet the law's requirements. So how do we comply with this law? What are the tools? CPACE, which is what we're going to talk about today, or Commercial Property Assessed Clean Energy, provides long-term, low-cost financing that is tied to a property rather than the owner. So although New York City authorized the program in 2019, the pandemic slightly delayed its rollout, and our program administrator, which I will introduce in a bit, NYCEEC, really launched the operations in 2021, with the first deal closing in June of that year. And since then, more than 290 million has been financed through CPACE. And the asterisk that I have on here, that 345, is we have a couple of deals in the hopper, so it should, by the end of the year, fingers crossed, get to that number. So that's exciting. Another tool we have is something you've probably heard in the media, which is J51 reform. For nearly 70 years, J51 has been a cornerstone in the housing program. It's originally designed as a tax abatement and exception for building owners to encourage them to rehabilitate aging housing stock. And the reform revived the law and tax abatement to expand it to Local Law 97 retrofits. And then lastly, I just want to talk about the Affordable Housing Reinvestment Fund, also known as the Greenhouse Fund. This program allows buildings to purchase offsets for up to 10% of their emission limits. The revenue of these purchases flows directly to HPD's Resilient and Equitable Decarbonization Initiative, and that enables them to fund deep retrofits and electrification in qualifying affordable housing. So together, these tools, along with several others, create flexibility across different building types and income levels. How do we implement these tools? We need resource partners, and technical support is really important. And that's why the city created the New York City Accelerator in 2012, well before the passage of Local Law 97. The program has evolved over time and was relaunched in 2021. And I will highlight that we're in a transition currently with the program, and I'm looking forward for exciting announcements coming in 26 about the relaunch of the new accelerator. Today, just as an update, it provides free one-on-one guidance, both technical and financial solutions, and they've engaged more than 25,000 buildings, and on the financing side have supported 700 and nearly 800 buildings in identifying pathways to achieve their decarbonization plan. Our second resource is NYCEEC. So NYCEEC is New York City's mission-driven lender, and NYCEEC serves both as our PACE administrator and also our offset coordinator. They deliver specialized financing that supports our policy goals. And to date, they have mobilized $644 million in capital, with 84% of projects located in low and moderate income communities. And their work has helped green over 1,600 housing units and upgrade more than 500 buildings, eliminating 1.32 million metric tons of carbon dioxide. And with that, I will turn over to Kyle Madden-Peister of NYCEEC.
Thank you, Ivy. So yes, as Ivy said, Kyle Madden-Peister with the New York City Energy Efficiency Corporation, NYCEEC. We're the administrator of the PACE program for the city. So I'm just going to level set a little bit and do a high-level overview of PACE and the New York City PACE program. So PACE is Property Assessed Clean Energy, and as Ivy said, it's a tax-based financing mechanism. It provides long-term fixed-rate financing, and it's for energy efficiency, renewable energy projects for buildings, for both new construction projects, but I think most importantly for retrofits of existing buildings. So first one is that PACE, the financing is provided by private lenders. They're pre-qualified lenders in the program, so it's not a city, or government funding. PACE is a private-public partnership, but all the financing is from the pre-qualified lenders, and you'll hear from Michele next. So one of the most unique features of PACE is that it is repaid on a property's tax bill to the Department of Finance. So the payments are made same as your property taxes are made at the same time and in the same manner. That's one of the defining characteristics of PACE. Also important is that PACE, unlike a mortgage, PACE is not accelerating. So, the full amount of a PACE loan can never be due. The only amount that's ever due is whatever, whatever is due at that point, or of course, if something's past due, that's due. But unlike a mortgage, a full amount can never be accelerated. And then also, as I mentioned, PACE goes to the property. So the property owner does take out the PACE loan, but the loan is actually made to the property. Therefore, it can be transferred upon sale of the property, and also the charges can be passed along to tenants of the property when it's appropriate. So you can go on to the next slide, please. And then here's just a quick overview of the New York City PACE program. We're going to talk more about this, and certainly if you have questions, please make sure to ask them. So yeah, just as we mentioned, NYCEEC, we're the administrator of the program. We work closely with the Mayor's Office of Climate and Environmental Justice, as well as the Department of Buildings and Department of Finance, to help run the PACE program. So we help craft and implement program policy, work with the program documentation. We review projects to make sure that they meet all the program requirements, and we'll talk some more about that in a little bit. And then also we coordinate the remittance of the funds. So when the property owner pays the Department of Finance, we help coordinate the funds going from the Department of Finance that then go to the PACE lender, since it is the PACE lender that's providing the financing. So here's just some high level points about the program. As mentioned, energy efficiency improvements. We'll talk some more about that. That's broadly defined. It does include electrification measures, such as heat pumps, which, is sort of one of the core policy goals of New York City. So, those types of measures are eligible for PACE financing. Also includes renewable energy systems, so solar, battery storage, all those sort of things are also eligible. It is an open market PACE program, so there are 16 qualified lenders, and Michele from Counterpointe will speak as one of those qualified lenders. We expect there to continue to be more, but the program, is open for more lenders, and the property owners and the lenders work together to make the loan. The program, we help facilitate it, but it is PACE is an agreement between the property owners and the PACE lenders. So the PACE program in New York City is open for commercial properties, which is defined as any property that's not a 1 or 2 family residential. That includes nonprofits. It includes other types of properties that we'll talk about. And so the terms, as mentioned, they are set by the borrower and PACE lender. However, there are certain aspects that are required. So fixed rate. There can be one increase of rate if it's or decrease if it's agreed upon, but generally it's fixed rate, so it's not a variable rate. And the loan term, usually the PACE is long term. It is limited by the life of the project. So if you have a solar project that is going to last for 25 years, the loan can only be up to 25 years, but generally PACE is, it is not a 5 or 10-year loan. It is usually in the 15, 20, 25-year range. So that means that, repayments tend to be lower because it's a long term of repayments. As mentioned, the PACE is paid to the Department of Finance. And importantly, also, if there is a mortgage on the property, consent from the mortgage holder or the senior lender is required. So that's part of the process, and we'll touch on that. And then lastly, there are technical requirements, one of the main ones being that an energy audit for energy efficiency project or feasibility study for renewable energy project are required. And that is something that we will also get into more soon. So that's kind of a high level overview. And with that, I will turn it over to Michele, who can speak from the lender's perspective.
Terrific. Thanks, Kyle. So I'd like to thank Kyle and his team. It's not easy to work through a complicated deal, and it just was a terrific experience. There have not been a lot of PACE deals in New York City. For those of you listening, you will have surety of execution. We have another what I'm presenting is a new construction deal, but we have another that is installation of heat pumps in a co-op, sort of what the CMA was geared towards for electrifying a building. And I think there is now clear pathway for PACE to be extremely active in New York City, at least in our firm. So Echelon Studios, it's a $156 million PACE that we closed in September. This is a landmark transaction for several reasons. If you would go to the next slide, number one was that the owner here, the developer, is a global institutional investor with probably almost 200 billion of assets. This is the second deal that we have done with a real estate investment fund that operates on a global basis. We've worked with many corporates that are global corporate companies, but it really signifies in the PACE industry the advent of PACE becoming mainstream for new construction finance. It is all the big names. This this one included, are now considering PACE in their capital stacks, which is part of the reason why getting surety of execution in New York City has become so important and was a focus that brought this deal to fruition. The other reason this was a landmark transaction was on a national level. 156 million is not the largest deal closed to date. We actually have closed 256 million, but it is still a significant transaction, probably in the top 10 at this point. So it garners a lot of attention for, again, attracting institutional quality investors to PACE when you do a $156 million CPACE. On the state level, this is the largest PACE done to date in New York State, although I expect to be exceeded pretty quickly. And from a city level, this deal for me kind of typifies what the Climate Mobilization Act was trying to do. This is a new build of an ultra low energy property. 25% of the energy being used by this building is being generated on site. The performance is modeled to be 15% better than energy code, and it utilized PACE in order to get across the finish line. This deal was probably not happening without PACE. The cost in the capital markets are fluctuating. There's a lack of liquidity. It's hard to get cheap capital to get projects going across. I have many new construction projects that are in value engineering, even with the PACE, just because the cost of the corresponding senior lender is so high. So the PACE in this point, we kept all of our equipment. So to me, this is a real triumph for the city that we have a new build light industrial property that is being built by a global institutional investor it's such high building performance, and it's utilizing CPACE. So with that, the deal itself, it was two film and TV film production studios in Brooklyn to support the Brooklyn film industry. I think the avoided cost of capital with PACE, if they had to use so the mortgage in this case was lower than the PACE. It was 145 million. The PACE was 156. If you substituted the mortgage, if you took out the PACE and did the entire project with mortgage, then with the increased equity and the increased interest carry from the construction loan, there would have been we modeled another $51 million of cost in the development of these buildings.
I'm going to moderate questions and invite everybody to put their video back on. Okay, so we have a few questions queued up. Thank you to Seth for starting off the Q&A. Please, anyone who has questions, please put them in, but I will start you off to give you some time to do that. So Ivy, I heard you talk a lot about co-ops. Can you tell us which types of projects are eligible for CPACE?
Yeah, well, I'll have Kyle jump in here, but co-ops are a big component of what's going to come to the market. I foresee, because Local Law 97 is starting to impact how co-ops are going to have to deal with the decarbonization rules. And so to facilitate some of that work, CPACE is going to be the tool that they will be able to use. And Kyle can speak a little bit more. We have a state statute that is one component of it. And then we have our city guidelines, which enables the program further. Kyle, if you want to talk to some of those measures.
Yeah, sure. So I think broadly speaking, in terms of eligibility, so for property types, as I mentioned, New York City, the PACE program's open for all properties except for 1 or 2 family residential. So that includes co-ops. It also, I think most commonly has included commercial as well as multifamily buildings. It does also condos are a little bit more complicated because they are individually owned properties, but we do think there's a path forward. And Ivy had mentioned that there will be some updates to the program, so we hope that those updates will speak to condos. Obviously, condos are a very important property type in New York City, but I think the kind of bottom line is that the PACE program is open for all properties in New York City, except for a single family home or two family home. In terms of eligibility for project types, I mentioned electrification measures, and I do want to highlight that if you have a property and you're trying to comply with local law 97, and as part of that, you're going to, put in heat pumps and maybe replace your windows and do other measures that are necessary to increase the energy efficiency and save on energy costs. Generally speaking, all of the costs for that project will be eligible. So if it's $10 million project for an existing building, generally speaking, though that $10 million will be eligible to be financed through the PACE program. Again, you will have to work with the lenders, but PACE is really, the program is here to provide a mechanism for buildings to do this work that is needed. I don't know, Michele, if you have anything you want to add in terms of the types of projects. No, okay.
The only thing I would add actually is it's much easier to qualify than people think. And either speak with the accelerator, Kyle or myself, because the engineers in the area aren't quite familiar with it and sometimes overcomplicate it. But it's really a pretty, there is a question in the chat that said, how long did it take to qualify? For this project, the senior lender was already awarded and doing construction. The lawyers were already drafting agreements. The PACE had their energy report and was approved and ready several weeks before the construction loan was ready. So it is a quick and easy process for the technical.
And Michele's talking about kind of a great update that we've had in the program in the past year, which allows for new construction. And that's what we're really starting to see, how it can be taken advantage of for those type builds going forward here in the development of multifamily and other structures in New York City.
Okay, and what about leased properties?
Yes, so ground lease properties are eligible as well. You will need consent from the owner of the property, but lease properties can also, someone who has a lease on a property can take out a PACE loan as well. And there are, certainly a lot of those properties in New York City. We haven't had one yet in the program, but we do expect there to be an important part of the program.
Okay, great. So you guys did great intros on what your on your various organizations, but just for clarity, for the context of this conversation, can you just explain what role your organization plays in executing a PACE loan for a retrofit project? So Ivy, let's start with you.
Yeah. So as I mentioned in my presentation, the accelerator sits under the mayor's office, and the accelerator is this free concierge service. So buildings can contact the accelerator, and the accelerator has two components. So the first component is an assessment for the work that needs to be done. So account rep will help the building understand the pathway. From there, ultimately, the decision on what needs to be done, oftentimes buildings do not have a financial pathway to finance it. And so then there's a separate conversation with the financing team about tools that they can use to finance these construction means. And so one of those tools is CPACE. And so the accelerator would introduce the buildings to CPACE lenders based on their parameters. So not all lenders focus on certain parts of the market and or sizes of deals. And so what the accelerator does is help makes introductions for the buildings to a variety of PACE lenders to facilitate those conversations. And then ultimately the buildings make the choice of their own. And then Kyle can speak, or Michele can speak on like the lender's process and then the approval process by the admin.
Yeah, I think maybe Michele, if you go on to your part and then we can go to the review.
So I'm Michele. I run the PACE department here at Counterpointe. Usually an owner or a sponsor or an energy consultant or a contractor will reach out to us first, and we will do a screen for eligibility, and we will finance down to 100,000. And the top is pretty much unlimited. It will be limited by the project. I would say the smaller deals, sometimes it doesn't make sense to do it just because of some inherent fixed costs when you get down that small. So we work with the owners to kind of shape the transaction, and we prepare the package. It's called an application for the PACE program, but honestly, I think of it more like a closing due diligence binder, that it has every item that NYCEEC will need it'll have the title report, the energy report, the appraisal, the contracts, the final financing docs. We will prepare that package and present it to them for their review, while in consultation with them to optimize the project throughout.
Yeah, and that's where the program as administrator we come in. We work, as administrator, we mostly interface with the lenders such as Michele. But in this example, Michele would come with a project, and there's sort of two categories in the documents. There's the technical documents, which, as Michelle's saying, is an audit, and sort of the backup documents about the project, and then the legal documents. And the lender comes to us, we review it. The program is committed to reviewing and approving the projects, quickly as it can, while of course ensuring that the projects do meet the program requirements, especially if the program does have what we call pre-qualified measures, which go to the electrification measures. So with those types of projects, the review is very quick, and we coordinate with the PACE lender to say, okay, we look at the project, it meets the requirements, and then we help coordinate the closing, which does involve the city, the Department of Finance, because at the end of the day, the PACE loan is signed off by the borrower, the lender, as well as the city, because the city is agreeing to collect the PACE loan on the Department of Finance tax bill, etc. And then NYCEEC, as administrator, we're coordinating everything. So we're kind of the quarterback of the closing, so to speak, and help bring everyone together.
Okay, thank you very much. And before we get into the details of how a property owner actually gets the loan, like what the process is, can you all just talk for a moment about what are the benefits to the various stakeholders?
I mean, in this day and age where financing is challenged, I think that there's a long-term benefit to building owners because, as Kyle mentioned, these are long-term assessments over 25 years and therefore makes the actual payments much smaller. And so it's a way to do some off-balance sheet transactions to facilitate decarbonization to comply with Local Law 97. So it's long-term asset protection and resiliency, as well as it complying with a city law.
Yeah, I would just echo that I think there's obviously benefit to the property owners, and then also in terms of Local Law 97 and various other obligations that the property owner needs to comply with. PACE provides a path forward for that, and also in a program that is really unique meld of the public government side as well as the private sector, and from Michele and the lenders. I think PACE is pretty unique in that it is this public-private partnership. Everyone kind of gets everyone benefits from it in their own way.
So one of the questions we get asked routinely is, why doesn't mortgage lender agree to PACE? How do they benefit? The PACE primes me. One that's actually, I'm not going to explain how the priority of a lien while there's a lawyer here. So Kyle, maybe you should take that one.
Yeah, sure. So as Michele is speaking to, and as I mentioned, the mortgage holder does have to consent. PACE. So since PACE, the repayments are collected on the tax bill, the repayment is treated similar to a property tax, in which means that if a property owner were to not pay their PACE charge, is what we call it, that's on their tax bill, they owe $100, they don't pay that $100, technically that PACE payment would have priority over the mortgage, so it kind of goes above it. Again, remember that is only for any single payment or any past due payment. If you owe two, then those two payments, it is never the whole amount of the PACE loan. Just like property taxes, you don't owe your property taxes that are due next year until they actually become due. It's the same with the PACE loan. So that the fact that a delinquent PACE charge would have quote unquote priority has historically led mortgage holders to be hesitant. However, we are seeing there have been many PACE loans in the country as well as in the city, and we have had senior lender consent on all of them. So the senior lenders are consenting, and one of the reasons they do that is because they see the value in these projects being done for their properties, right? These projects will improve the properties operation, improve the properties value, and they can see that it is essentially a good deal for the property. And then also the other side of it is that again, the exposure is only ever that amount that's due, right? So it's never the full amount. So if it's $1 million PACE loan, they would, it would only be whatever the $20,000 payment that is due at that time. The kind of risk to the senior lender is not is not huge. It's comparatively small.
De minimis, quite
Yes.
de minimis. I mean,
Yes.
Michele can speak to that, but at the end of the day, their assessment on the value to the property versus their ultimate risk to their loan is pretty small. And that's why I think ultimately you've seen the traditional mortgage lenders accept PACE, because it is a tool to help their asset grow in value.
So, and that was before I was explaining that it's only the delinquent payment that primes them and they can escrow it. We have several anecdotal cases of owners getting above asking rents because their buildings are green. As a PACE capital provider, my role is to make sure that the costs to make that building green, what the PACE payment is less than utility savings, so that the operational cash flows of the building are positive the first year, that it pencils out, if you will, the first year. And so I get asked a lot by the energy guys, like, how long is a payback? It's first year with PACE. First year is payback. And that helps the mortgage lender because now they have increased value because the cash flow, the building is performing better from a financial standpoint. I have one case study of a Class B office building. That's kind of those Class B means it's not beautiful. It's not Class A, that we took net zero, and the building went up $1 million more in the appraisal than the money that we put in to take it net zero. And I found that very exciting, that's a benefit for the owner as well as the mortgage lender by decreasing their exposure, because now the building's worth $1 million more than was invested in it.
Okay.
And I would just add that for New York City, with local law 97 and with the next compliance period of 2030, in which the emissions limits will come down and buildings could potentially face penalties, face fines if they do work that brings them into compliance. They're then what we consider avoiding, the avoided cost of the penalties they would pay. If they did a PACE project, they did a project that instead of paying $200,000 each year in local law 87 penalties, they would then pay none. That is economic savings to the building as well.
Thank you for laying all that out. That's a lot clearer to me now. All right, so let's get into the nitty gritty. How does a property owner get a PACE loan? Ivy, do you want to start? Because probably you and the accelerator are where folks go.
Yeah. So as I was talking about, they come in through typically through the accelerator. They do some assessment on what's needed for the building. Then there's a financing conversation if they don't have ability within their existing mortgage or liens. And then that conversation leads to an introduction of PACE lenders like Michele and other lenders within the program to facilitate, is this an appropriate project for, say, a Counterpointe or another lender, right? And so then those discussions are had back and forth. That's away from the accelerator. The building ultimately will decide. And then a Michele would come in and she can speak to how it proceeds once a building has decided to choose, say, a Counterpointe as their lender.
So for new construction, the underwriting process is identical to any construction lender, with the addition of the PACE metrics on top of it, that it needs to comply with an energy report and PACE program guidelines. So that is just traditional construction lending. For a retrofit or for a like measure replacement that's going on in a building, then I think our approach is really driven to make it pencil out the first year. So we will do a preliminary analysis of the maximum assessment that we think the building can bear, and then we'll work with the owner to evaluate every energy conservation measure that is being proposed by their energy person, and then possibly suggest some more. I think a typical situation for us would be the co-op that we're working with right now. They're doing heat pump installations for their direct hot water and for their HVAC, and did not consider doing their lighting. So that would be something that's kind of low hanging fruit, very easy for my underwriters to get on the phone and say, do you still have fluorescent lighting? Is there on timers? Like, what are you doing? So that would be how we sort of approach it. And then we would package the deal together to start working with Kyle.
Yeah. And then Michele would come with the deal. And just to be clear, we make sure that the deal meets the requirements, but the program is not necessarily prescriptive. Like Michelle's saying, we're not going to say you have to do the lighting measures. That's not how it works, right? We just make sure that the project as agreed upon between the borrower and lender does meet the requirements of the program. And we, as administrator, we work really with the lender and the lender's engineering team. They would submit the documents to us. It does depend on sort of everything being submitted, us getting a full package. But I could say that our goal is to close within 30 days of getting the package. There is sometimes, or can be back and forth, so that can extend out, and it does depend. I am a lawyer. There are lots of other lawyers involved. Sometimes that slows things down, but we try to do it as quickly as possible with deals that are relatively kind of straightforward. Then the review process and the closing process is correspondingly smooth as well and quick. So there is this whole phase beforehand, or almost two, where a property owner would maybe go to the accelerator and then work with the lender. So those are kind of the initial and then very important parts of it before they come to the program and present the project and say, here it is, here's what we want, and then we sign off on it.
Okay. There were a couple questions in the chat. My question for you is, what is the maximum loan of how is the maximum amount of a CPACE loan determined? And there's two questions in the Q&A about the minimum size of a project. So can you speak to that?
It depends on the legal costs as to the minimum. It's if there's going to be $15,000 worth of legal costs, it's very hard for us to, not at least have a frank conversation with an owner to say, you might be able to find other sources of financing for $100,000. Usually the legal costs are not that high for the small deals. We're usually a couple thousand, but sometimes someone has a very complicated ownership structure or needs a new deed or something, and somehow it just skyrockets.
Typically you'd say like 100 to 250 is the kind of minimum, right?
Well, Kyle may be able to answer this better, but we may be one of the few. I mean, my average deal size is 100 million or above. I just closed 60 million in Philly a couple of weeks ago, and that was one of our smallest deals this year.
There are less PACE lenders that do under $1 million, but there are PACE lenders that do 250,000. I should say, not in the million.
And 250 kind of makes sense if there are huge legal costs.
Just to be clear, there's no minimum from a program perspective. It's not, the program doesn't have a requirement.
It won't pencil out. It doesn't financially make sense.
Of economics, right? So like any deal, it has to make sense. So I think from what we're hearing is that around 250 below is when it starts to get iffy, but it does depend on the lender and the deal, of course, as well.
One of the things I would say is, don't think that you can go once every 2 years or once a year for like additional projects with PACE.
Good point, Michele.
Yeah,
you want to all encompass it one shot. Like that's why Michele was talking about those other metrics that you can, or other tools that you can use. The building that she's working on didn't do lighting costs, but that's something you can wrap in. I believe like windows, roof, like those sort of things, and correct me if I'm wrong, Michele, are also things that can be added into the project to help in a one-time
Yeah, there's a whole list of pre-qualified measures that that are there that can just sail through the technical review because they've been pre-qualified. But it is besides the fixed costs for doing a second PACE assessment, it gets expensive to do it a second time if you keep doing it for small amounts because of the fixed costs. But also, it is just not a program that is designed to go more than once. We have closed 2 assessments on the same building. Generally, it's for cost overruns for a project. You can do it in a short period, but it is really not geared that way. And there are other just fundamental issues that might come up.
Okay.
And yeah, and just to clarify, yeah, so all the sort of energy efficiency measures that are identified that are eligible, such as HVAC and building enclosure and lighting, windows, the things that we've mentioned that I think people would think about, as well as the work that is not necessarily purely energy, but is necessary to do those measures. So if you have asbestos remediation or fireproofing or other things like that you have to do as part of the overall project, all of that is eligible for PACE financing as well, because oftentimes it's not just the
Right.
specific kind of energy.
Where do we find that list? On the NYCEEC website? The list of approved measures?
It's in the guidelines. I do think, speaking with the accelerator or the administrator or Michele, is good. But yeah, I mean, generally speaking, HVAC, building enclosure, lighting, all those things are eligible.
Okay.
And I will just hammer again, electrification, anything electrification is pre-qualified, so that's automatically. So again, if you have a $5 million electrification project, it's eligible. You can be, very confident in that.
Okay. So there are a couple of questions that Michele graciously answered in the chat, but that doesn't make it to the recording. So I'm going to ask you to answer them again. So you talked about an energy audit as part of the application process. Are there energy audits required after the financing is provided? Like, how does that work?
So that's more Kyle.
Yeah.
Okay.
Anybody could run out of time.
The short answer is no. Audit is not required. The audit, there's sort of the project's reviewed upfront beforehand. The audit's required. Then we sign off. We do, we do want to make sure that from a program and city perspective, the projects are done and get some data. But we work with the lender. But there's not an ongoing cost for a new audit
Okay.
post approval, really.
Great. And someone asked if the program is open in Long Island, not the one that we're talking about, because that's New York City, but there's another PACE.
New York
program.
State has a PACE program. So yeah.
We actually closed the first deal in the other program in 2019, and it was out in Long Island. So then open.
Just to make sure everyone knows, we're talking only about New York City here, and then yes, there's a New York State program which is separate, which is run by a different organization.
Right. And there was a question earlier, what's the minimum size from a nonprofit? Are nonprofit groups are eligible just like any other organization? Okay.
Yeah.
Yes.
Yeah, that is true. And we have multiple loans actually to nonprofits in New York City. So they are eligible, yeah.
Excellent. A question from Seth. I've heard that CPACE has been used to upgrade cooling towers based on the cost of water usage savings. Can you elaborate on that?
They can, so any savings can be included in sort of the assessment, from a program review perspective. I think they would also go to probably Michele's underwriting as well. So yeah, it does, that is, I think the short answer is yes, it is eligible. But of course, yeah, it does depend on the project.
Okay, that's fair. Another question from Seth is there any track record in the CRE marketplace for valuing future unrealized CPACE funding during property facility sale transactions?
So, and I'm not going to speak for the entire industry and all the capital providers, but the CPACE funding is meant to install the project between the owner and the capital provider. If the building is sold during the project, then we actually do not necessarily continue with the project. We would reevaluate it and make sure that everything is going to be installed that was agreed to in the agreements. So generally, this doesn't come up. The PACE is fully funded before anything gets sold.
But that's one of the features of PACE is that it stays with the building.
For repayment. Once it's funded, then the repayment. You only pay your share per year of the equipment that you're using just for its life. And then it transfers, the next person pays for the equipment.
Okay. Is the PACE process like a mortgage closing or something different?
We do both. It is very different in that the PACE does a dry close and records before any money is transferred. The other difference is that the agreement is with the city of New York. They're creating they're the driver of this, and the capital provider is providing the funding to further the agreement between the property owner and the city. So there's a misunderstanding that a lot of things can be negotiated because they think it's like a mortgage, that it's between the capital provider and the property owner, when in effect, the agreement is really driven by promises and an agreement between the city and the property owner.
Okay, that's so interesting. We have a question.
And I would just to say, and yeah, I would echo what Michele says. You know, we have kind of program documents, and we work with the lender and the borrower and the city to close the process. One other key way in which it differs is that there is not a mortgage recording tax on it because it is not a mortgage. So that does not need to be paid.
Don't have to do an interest rate cap either because it's fixed rate. So it's cheaper in that way too.
Awesome. So we have a question about sort of non-financial benefits. Is there any potential, and if so, what is the time frame for cost benefit metrics for include deeper data on personal health care avoidance, so health benefits, and also the costs involved with avoiding climate adaptation? Is that
so? That plays a role in buildings' ultimate insurance costs, right? And so by doing these improvements, it will hopefully help the building's insurance going forward. In terms of like personal health, there are indoor air quality improvements that can be part of a PACE deal to help improve indoor air quality, and a lot of programs talk about that, and that's one way to address that.
Yeah.
Okay.
And I would mention that right now, unfortunately, the New York State law doesn't allow for PACE for resiliency, so climate adaptation measures, but there is a hope that
I would interject. We're working on it.
Well, the city is working very closely to amend the state law, which is hopeful in 2026. In that, assuming that happens, then PACE, you would be able, if you're retrofitting a building for flood resiliency or whatever it may be, that would also be eligible for PACE finance.
Okay, so my last question, and you've alluded to this throughout the conversation, is that this isn't the final iteration of PACE. So what are the challenges and opportunities that you're working on to make it better?
Yeah,
and easier?
So Kyle alluded a little bit to condos, and condos being a subset of the multifamily housing stock here in New York. So Kyle and I are working on the program guidelines to help create updates to facilitate PACE for New York. So updates to the guidelines to help make it user-friendly for further adoption is one tool. We talked a little bit about hopefully some amendments that can help with resilience. I think, some of the challenges, have been alluded with interest rates the way that they are, and a lot of buildings have mortgages set 10 years ago with really attractive rates, but as those come off, there's an opportunity to refi and also facilitate PACE. And so that conjunction of a dual lending is something that buildings will be able to take advantage of in this new time frame, and Local Law 97 is really going to help facilitate that.
Great. Thank you very much. Any other last words before we go to the final announcements?
I would just add, since this is New York City, that if anyone is working with an owner that is thinking of securitizing their mortgage, to please build consent for the PACE in before it enters CMBS. And that will allow the building to participate in the program in the future.
Thank you. And thank you all so much for this really informative webinar. I certainly learned a lot. This was great. And I want to just do one shout out to 3 brand new heat pump on-demand courses that we just finished. They're really great. They're quick, interactive, and immediately actionable for busy building owners, designers, and operators. And it's a great way to get some hands-on insights into heat pump best practices quickly. And you can find those on Urban Green's training page. Once again, we thank Con Ed for sponsoring this event. And thank you to the speakers. Again, that was great. And thank you to everybody who joined us today. And we'll see you next time.